Lightning like Steve McQueen. I'm in the fast lane when the light turns green. And I built tough, I ain't nothing but grit. Cause I made rugged blood, sweat, and spit. Yeah, like a horse I fly. Better push yourself in for a bumpy ride. I like to play hard, but I work harder. And I weather the storm cause I'm built stronger.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Morning Show, the top morning show in transportation, coming to you guys every single weekday, 8:30 in Pacific, 10:30 Central, to break down some industry headlines and provide some actual insight into what you can do with all of this information. If this is your first time tuning in, welcome. This is the real side of freight, ladies and gentlemen. And I say that before every single show. And what I mean by that is I only speak to transportation professionals. Because frankly, at the end of the day, you guys, I want to talk to the right individuals who have done what you're looking to do or who are currently doing what you're trying to achieve, so you can take that information, apply it, utilize it, and see meaningful difference in your business and your life. Tracy St. Clair, good morning, coming in over on YouTube. You guys, I go live on YouTube every single day as well. And I started doing that because of there's a bunch of stream issues going on with some of the other platforms. So YouTube is the place to be. Best, from all the listeners out there and the viewers out there, they say it has the best stream quality by far. Shimmy Munson, good morning. Let's do it. She says, do this. Excuse me. Yeah, you guys, it is Wednesday out here, and we are going to be, we got a couple of headlines. I got a market update for you. But before we go into anything else, we have a weekly newsletter that we just started doing. My man Christian, who is in charge of all of my marketing over here at the Freight Coach, he was like, we need to start a newsletter. So we started a newsletter. It drops every single Wednesday. And again, you guys, it's just going to be about a bunch of different things, right? It's going to be about market analysis, everything else. We're going to throw some training stuff in there as well, because again, I want to continue to be able to deliver value out there. And I'm not going to auto sign you up for this. I found out this morning I got auto signed up for somebody else's newsletter. And again, it's not like the end of the world, but I believe in building everything organically. And I think auto signing people up is kind of like cheating. So if you want to register for our newsletter, go to thefreightcoach.com, drop your information in there. You will get it every single Wednesday. You guys, I'm not going to spam you with anything else. So yeah. Let's see here. Steve Setka, let's go. Good to see you, man. He's over on YouTube as well. Little thing, the diesel is jumped back up. You guys, it's at $3.73 a gallon nationwide. I get all of this information from the EIA, you guys, EIA.gov. And a lot of it kind of helps out because there's a lot of companies that are going out to bid right now, right? It's going to RFP. And if they have a fuel schedule and everything else, you want to kind of know where things are. And, because right now diesel's trending down. It's still fucking expensive. I'm not trying to say that, but it is giving you a better idea on how you can bid this out by watching the fuel prices fluctuate throughout the year. It can help you lock in pricing for 90, 180 days or 12 months, whatever your customers' bids look like. Because when you're bidding line haul only, you don't want to miss, right? You want to be able to properly calculate it, but you also want to look at averages as well when you're doing that. So I get all of that information from the EIA. All right. Let's get into some fun stuff here, you guys. I put out a post this morning about improving your communication with your customers. And, I'm going to try my absolute best to, when I'm on a solo show, to continue to put out little training nuggets like that. I don't have all the time in the world to put out daily posts that aren't like for the podcast and driving for that. But I want to tie that all in to the actual podcast so you guys can tune into that. So communication, it's one of those things that's thrown out there all the time. And one thing in business that I have found success in is my ability to communicate and communicate quickly with a solution. I think that it's always easy to sit back and, communicate when things are going well. Right. And like I put that out there in my post, everybody's good when it's easy. Everybody is. And, if you want to look back, this market, it's been easy for the last 3 years, right? Capacity's been easy. It hasn't been easy for all parties involved in the industry, but if you're a broker, it's been an easy market for you to operate in. So you haven't probably had a ton of challenging situations out there. But, if you want to really separate yourself from your competition, I'm not advocating for anything to go wrong in anybody's business or book of business, but how you handle those situations is what gets you noticed, is what gets you more money in situations in the long term, and you can increase your revenues because, there's customers out there that are price driven, but they see the value in what you deliver through your communication, right? So they can justify if you have customers out there that are an open bid, right? They'll send out one load to six different providers, and they look at your price and say you're bidding $2,000, and you have a track record of no matter what, good, bad, or indifferent, you let them know what's going on. You go above and beyond in that, and somebody comes in at like 1,850 or 1,900. Realistically, in some instances, not in all instances, realistically, they're going to go with you. You're going to be able to prove your worth in those instances because you communicate no matter what. We had a shipment, a brand new customer we onboarded last week, and we updated them like 7 times throughout the first part of it. And our driver unfortunately couldn't make it in. I was supposed to pick up on a Tuesday, ended up picking on a Wednesday, delivering straight through. But like we missed the pickup. The driver had a mechanical breakdown. But again, I let my customer know right away. As soon as we found out, I let my customer know. I let them know that, hey, this is where the shop that the driver's getting fixed at. They're going to be in there first thing tomorrow morning to get it. And they're going to shoot to deliver it straight through because it was like 350 miles. So customer was appreciative of the updates. We updated them throughout the day, like, hey, the driver's fixed. He will be there at this time to get loaded at your facility. And then I sent him location updates throughout. And then I let him know as soon as the driver was unloaded, I sent him a copy of the POD. And this was a 1 pallet Sprinter van load, you guys. Like, this wasn't a overdimensional anything. This was literally a 1 pallet Sprinter van. And we sent him like no less than like 14 updates on that load. And that's the level of communication that I'm talking about, that no matter what, I'm going to let them know what's going on. We had another customer, same situation, brand new customer last week, that we moved the first load for them as well. Same thing, a ton of communication involved in that. We called the shipper, we called the receiver. Because in the open deck world, to go to a lot of job sites, so I coordinated with the project manager, let him know what was going on. The driver had all that information, and again, multiple updates throughout that. But again, like, that's the standard that you guys should shoot for in regards to your communication. Now, yes, there are some shippers out there who are like, dude, I don't need to know about any of this stuff. Go through my TMS or whatever that looks like. Find out how your customers want to communicate and develop that out from there. But again, you can't just talk about things when it's going well, right? Like, you have to really step up in those moments when there is an issue with the load or something along those lines, to keep your customer informed on that. Because that's what really separates you long term. It has, yes, price is a factor, but it can easily be looked that you can justify your value of when you show up in those moments when most people run and hide. And, again, I always use myself as an example. I was one of those providers for a very long time. I was one of those providers who, I freaked out about literally everything. And I hoped certain things wanted to work themselves out. And it honestly, it sucks delivering those messages in the moment, but your customers are so much more appreciative that you let them know than waiting. So communication, end all be all, the most important piece of your entire ability to work with customers long term is your ability to communicate and your ability to solve problems when those issues happen, so you can get in there and try and make their life as easy as possible. Because at the end of the day, guys, most people run and hide in those moments. So that's my little spiel on that. And again, when I'm doing solo shows, I'm going to try my best to remember to drop in some of those training tips, right? Because it's, throughout the week, like with the Q&A show and everything that we do on Friday, I still get other questions out there about what to do in certain situations. And this is just a way for us to put out what we do inside of my operation, right? Like, this is what I actually do with my actual freight that I am moving. Okay. This isn't a hypothetical example. This is real, actual transactions that go on in my business and how we handle a lot of them. Zena, what is going on over on LinkedIn? Jamie, SP Freight over on YouTube. Good morning to you. Thank you for tuning in. But let's get into some articles here, you guys. I want to kind of break some stuff down. And where did my links go? There we go. As always, you guys, with all of this, the audio only replay will be up on iTunes and Spotify almost immediately after the show. Just search for the Freight Coach, you guys. You guys can find me on any streaming platforms or anything like that. The replays will be up there. And as always, if you guys think I got, gave some value out there, subscribe, share the show, you guys. Get it out there to your network, because if you saw value, your network's going to see value as well. All right, first article, ttnews.com. Warner CEO says freight market is returning to normal. Derek Leathers tells Wells Fargo 2024 Industrials Conference the freight market is nearing an inflection point. Warner's Derek Leathers said patterns emerging in the cargo marketplace point to a long-awaited adjustment that could help lift trucking out of its persistent freight recession. Inventory levels in general are now more normalized, Leathers said during a June 11th presentation out there in Chicago. As people and retailers are selling through goods, they're back to a replenishment cycle that we haven't seen in a couple of years. And that can be very meaningful as we set up for the fall and peak season. The trucking industry has been in a down cycle for nearly 2 years, with capacity well overshooting freight demand. While Leathers noted that consumer demand has maintained relatively well during that stretch, there are no signs of forthcoming spending surge. We're not banking on any kind of uptick, a significant uptick in consumer behavior, nor are we assuming that the consumer suddenly goes silent. I definitely agree with him on that. I mean, there's I would say if anything, consumers are going to continue to reel back in and watch their expenses more than anything. But I think that he's right in that statement. He also noted that it's taken retailers some time to reset their inventories out there. Everyone got their inventories out of whack post COVID, he said. And then no matter how good they were as a retailer, but the really good retailers have gotten back to normalized levels. They feel like they are where they need to be, and there's not any sort of bloat left over. Now they're back to normal replenishment. So as they sell through the replenishing and preparing for what would look like a normalizing fall, those are all encouraging signs. And then this was another key point to me. Leathers added that this year's bid season has been an improvement over 2023 cycle marked by a tremendous amount of churn as carriers tried to hold firm on pricing. He said this year has been a more stable approach. There's still some pressure on price. There's still some pressure throughout the process, but much less churn. That is an indication that everybody, both sides, so to speak, are realizing we're closer to an inflection point. So it's not a great time to go shuffle your deck dramatically in terms of your carrier provider. I mean, obviously, why wouldn't the CEO of a trucking company say, don't look at us, don't look at any new providers? In that, I think that I love watching a company like Warner. I love watching how they operate in these markets and everything else, because they're big, right? Like they got a ton of data coming through there. And, I truly think that when you can learn from you learn the behaviors from a lot of these other players that are in the industry, right? Because success leaves clues. I'm a very firm believer in that success leaves clues, and how some of these guys operate in these markets is a great indicator on how you can operate in your small business or your trucking company, whatever that looks like out there. And he also said, he's like, from a rate perspective, they're going to be disciplined in their bidding out there. We've been public about that. I don't think that the industry has any more to give. Whether the industry chooses or not, we don't, and we are not. I like that approach, right? I like that he's like, no, we're sticking our feet down. We can't continue to cut our prices because, they got a business to run too, right? And again, a lot of, Warner's got a lot of data. They have it down to a science. I would assume, I don't work there or anything like that. I would assume they have it down to a science that they know exactly what every waking moment their truck is running, what it costs them to operate. And I think that for them to say, hey, we're done with rate cuts, we're holding firm on that. I agree. And that's a strategy that a lot of people could take in their business, right? Because like, I'm not going to play the race to the bottom game, right? Because if somebody can get it done for cheaper than what I'm quoting in the short term, go right ahead. Again, I play the long-term game here. And I think and this is just coming from my experience of this. It is so much easier to hold firm on a price and wait for that rate to recover, than it is to race to the bottom and try and get more money out of your customer, right? So it's like, again, if you're at $2,000, you're making your profit margin 12%, 15%, whatever that is as a broker, and your customer says, hey, I need you to be at $1,900, and you got a solid carrier on there, and you know that you are paying at market, and you can't go down any more than that because, for whatever reason, somebody else is in their ear telling them that they can do it for cheaper. I personally believe in letting them take the freight, in the short term, because I've seen this happen so many times in my career that generally speaking, not in all the times, but generally speaking, it's only a matter of time before they come back. And I say that because most people go in there and they bid super cheap to get the business, to hoard revenue. And then eventually their plan is I'll just start raising my rates in time, where it's like, nah, I think it's easier to hold firm at that price and stay at 2000, because customers will not want to give you more money in the short term, because they'll be like, well, why were you able to do it for 1900 2 weeks ago? Now you need 2000 again. I just think that it's a lot easier to play that game. And again, this is a personal preference of mine. If you have success doing it the other way, more power to you. But if I'm thinking long term, I want to provide as much consistency in my pricing to my customers and my carriers that I possibly can out there. So that article was from TT News. Again, I'm a fan of Derek Leathers and what they talk about, and what they do over at Warner. I really think that it is something we can all kind of model after. And your boy has a quote to work on. 1 second, you guys, I got to reply. All right, let's go. Got to get those responses back to your customers quick, you guys. See, within 1 minute, we got that. Justin McAfee, what is up? Let's stop racing to the bottom. He says, amen to that. Yeah, man, that's it's always at the top of my mind, because especially because a lot of the customers that we are working with now, like, yeah, we have a couple that we've been working with for a year and a half solid, because that's really when we first started back up, and a lot of our relationships that we're building we're still in the infancy stage of it, right? So it's like, for a long-term strategy on developing a customer is I would rather not risk in any market, right? Like, I would rather not risk it with knowing that it's going to price myself under, and then I might have to make a bad decision on a carrier or whatever that looks like, or use an untrusted or an unthing relationship, that I think that we need to focus long term, because again, like, my business, my brokerage, my agency with SPI it's in its infancy still, right? Like, we are we're really like, we technically started in late 2022, but we really didn't officially launch until January of 2023. So we're 18 months in, right? Like, we're still, even with our longest established customers, we're still kind of the new kids on the block, because I don't know if they've been working with some of these other providers for 5-10 years. And from my perspective, I want to play long term. I want to be as stable as I possibly can. Now, yeah, we do take risks. Yeah, we do take chances. That, of course you do. But I'm not reckless in that. And I haven't always been this way. I was reckless early on in my career with stuff, and it cost me business. And I guess this is just the price you pay to kind of learn in the moment. So I think as things start to fluctuate here, you guys start paying attention to that stuff, right? Because and more times than not, like I said, in my years past, again, I've moved 3 truckloads in the entirety of my career, and that is me being entirely sarcastic. But any of those times where a customer's asking me for a rate decrease, a couple $100, and I know I can't do it, I would rather sit back and wait, because it's only a matter of time before the customer will come back to you. Hey, it's their fiduciary responsibility. I'm not going to tell them how to run their business. I'm just going to let them know, like, hey, that's a really good price. We're here in the event that you need us again. And I would kind of leave it at that. But my man, Freight Sensei in the house, Scott Watanabe. Good to see you, man. Love the real moments on the show. He says, shout out to green screens. Yeah, man, shout out to green screens. That's how, you know what? Let's use green screens right now to bid this load out. Now that you brought up green screens here, you guys, we're going to definitely bid this out with green screens right now on this load that my customer is hitting us up with last minute. I like that price. Perfect. We are definitely going to quote that on there. Let me see here. Green screens, you guys, I'm telling you, we use them. Like, literally, yes, they're an advertiser on my show, but I actually use them. I'm a user of their product inside of my brokerage. And there's some of these loads that, like, their price that they put out there is like literally within $5. I'm not even fucking making this up. Literally within $5 of what we ended up paying on it. So again, hit them up, you guys. hit up Green Screens and win some freight with them. Justin, get that freight. Get that freight. Give me just 1 second. All right, perfect. Let me see here. Robert D. Demencio. All right, he says transportation. If it ain't people, then it's freight, including last mile parcel and municipal water, not just truckload or LTL. Steve Setka says our company in Canada, the highest margin percentage consistently in our network. Too risky to go too low on margin in case of errors and issues. Got to be creative and go above and beyond. And Robert says Jack and Joe went up the hill, but long term they rely on plumbing. Oh, that's funny. Oh, Robert, I love it. Scott says we've been able to leverage that data to get more spot loads these last weeks as well. Yeah, man, dude, it's wild what how beneficial it has been, especially in certain markets that are out there, because again, you guys, the markets are tightening up in certain areas, and going going forward here, you guys, because like produce season for all of my friends out there, literally as of yesterday ended in Florida. So it's up into Georgia right now. So now the loads out of Georgia, everything, the rates out of Georgia are going to start to increase because capacity is going to be gone from that. People are going to be deadheading up from Florida to go into Georgia to start picking up some of these better paying produce loads out there. So keep that in mind, you guys. If you guys have any freight moving out of the state of Georgia, that they will be your rates, even dry van rates, will be affected by produce. Okay. Capacity is going to tighten up for this, and rates are going to naturally start to increase. So pay attention to that, you guys, moving forward. And then from there, it goes from Georgia, then it goes up into the Carolinas, and then it kind of migrates up the East Coast. So pay attention to this right now, you guys. It's end of June. All right. You're going to start seeing the data companies and all of these other people in the industry start talking about how rates are going up out of the Southeast, and they're going to continue to talk about that. But remember, you guys, like, you heard it here first. All right. It's going to migrate up the coast. So they might be talking about Georgia right now, but the Carolinas are going to be affected next, then Virginia, Delaware, stuff like that. Okay. So pay attention to that. That will affect dry van freight rates coming out of those areas as well. Okay. Just trying to help you guys out and win some more freight long term. All right. Because that is what we are talking about here on the show. I want to help you guys all win with all of this information. All right. Let's see here. Next article, joc.com. Hold on. I got to sign in because this is one that I wanted to break down, because this was written by my good friend Eric Johnson. If you guys aren't subscribed to Eric Johnson's Substack, or if you don't follow him on any social media, you guys need to. Eric Johnson is phenomenal journalist out there, and I really love what he writes. Anyways, you guys, this one's about VCs, and it says Transfix sale highlights VC's uneasy fit within freight brokerage. In an 8-month period, the digital freight brokerage model has taken multiple body flows that demonstrated a heavier exposure to market dynamics than the incumbents that digital brokers were trying to unseat. In early June, Transfix was selling its brokerage business to NFI while keeping its technology unit to sell as a standalone software product. Obviously, we know what happened with Convoy, and then those two companies emerged among a group of ones in the mid-2010s, including LoadSmart and Uber Freight, and then Cargomatic and Next Trucking. Convoy's brokerage is gone. As we know, Next Trucking, which raised $124 million and was acquired by CDL 1000, another drayage broker, in February after post-pandemic financial struggles. Forager, a cross-border focused trucking broker, was acquired by Arrive in 2022. Only Cargomatic, LoadSmart, and Nuvo Cargo, another cross-border broker backed by venture capital, have been untouched by M&A out of that original cohort. The uneven success of the digital brokerage model suggests that the foundations of the market were harder to disrupt than venture investors first envisioned a decade ago. First, the emergence of digital brokers came as brokerages in general grew after the deregulation of trucking, and this was not a market that was ready to be wiped away. Secondly, the capital needed to build an actual technological moat in a price-sensitive market was huge. Look no further than Convoy and what they did. But digital brokerage was always a bet on the unknown. The venture industry that fueled the rise of digital brokerage is built around mathematics of asymmetrical gambles. A fund may invest in 20 companies that it believes will be successful, but history shows only a fraction, if any of those, will become huge. And that's across all industries, right? That is how venture fund math works. 1 or 2 companies in the portfolio of 20 may, in the parlance of venture, return the whole fund. The other 18 or 19 will be shuttered or sold for spare parts. Late stage funds, and this is the type of that is invested hundreds of millions in Convoy, have a similar diversification strategy. The industries into which they invest. Seasoned bettors at the racetrack don't fall in love with a single horse or race, but the rather winnings accumulate. Sorry, guys, I went to public school. Their winnings across the entire year. While critics have long claimed digital brokerage was indistinguishable from brokerage in general, venture investors a decade ago made a different bet, and they theorized cost to acquire customers out there. But the two market forces, relentlessly competitive and fragmented market in cyclical industries that, okay. So A, this is a really good article. You guys all need to go check it out. B, I just think people were too early to the game in the digital space. I think someone might actually be developing it right now. I personally think that the digital component of freight brokerage will increase. I truly do. I don't know when, I don't know the timeline, but what Convoy was building, what Uber is building, and other digital marketplaces are building or have built, or what they attempted to build, they might have just been too early to the party. I think that there is a ton of freight that is out there that is highly commoditized, right? I look at some of these loads, some of these lanes, power lanes. You look at Atlanta to Chicago, 42,000 pounds, 26 pallets, bottled water. It's the same shit every single day, 10 loads a day, whatever that looks like, hypothetical example. That will be digitized. There will be no reason that a broker should have a carrier rep managing that freight where it should go out in a digital component, that freight matching stuff. It will happen eventually. It just didn't work this time. I truly, truly feel that way. And no, this isn't me saying that a digital broker, nothing's going to work and this and that. I'm not shitting on anything. I'm just letting you know it's only a matter of time before that happens. Because you can have the transaction itself digitized and then have the human capital behind it to handle issues when loads aren't ready, wrong products loaded, whatever that is. I think that there's going to be a hybrid model that kind of comes along with it. I just think that some of these guys were too early to the party, and I think that someone's going to crack it and someone's going to be very fucking successful with that in the long term. Justin says, does it seem as if the digital brokers leave the market first? I mean, maybe, man, but that's the problem with when you're backed by investors, right? You only can raise so much and you only have so long of a runway before the investors are like, you're fucking done. We're not giving you another dollar. Sell everything, fire sale, get us as much as we can back of our original investment. I mean, Eric broke it down pretty much perfectly right there. I think that there will be a larger push for a digital transaction inside of transportation. But yeah, that will be it, you guys. That is from the JOC Transfix Sale highlights VC's uneasy fit with freight brokerage, written by my man Eric Johnson. We will have a guest tomorrow. We will be back tomorrow, 8:30 a.m. Pacific, 10:30 Central. As always, you guys, if you guys got value in what you heard, subscribe to the show. Share it out there to your network, because if you see value, your network's going to see value as well. I appreciate you guys. I love you guys, and we'll be talking to you soon.